Hello, this is Scott Cisco with GbpJpy. Thought we'd take just a quick minute and look at the pound yen and a setup that involves Fibonacci levels just to see how well they played out this morning. It was really a fantastic set of trades that occurred, and I thought you might benefit from looking at this. We'll start by looking at the daily chart. As we see here, we have a Fibonacci level that's drawn off of the low that we had on May 20th. That low was 126.70. to a high that actually went back a few days prior to that, April 26th, with a high of 145.95. We're going to look at two different plays on this. Specifically, we're going to focus in on what occurred this morning at the 50 back level, the 5.0 level. Let's go down to a 1 hour chart and we'll see a couple of different setups that occurred that I think you can benefit from. Now first, as we were moving through this uptrend, the 382 Fibonacci level got some respect and turned out to be a fantastic trade. I will mention, as my video yesterday was on the dollar yen, I talked about using a 20 pip stop. On the pound yen, because it's much more volatile, my stop will generally be closer to 30 pips, somewhere in that range, but 30 it would be the max for this type of setup. Now what happened here was that as the guppy moved through or passed through the 382 level, it did the typical play where it comes back and actually retests that level. Now if you look at this current candle here, you'll see that we had a low of 133.85. Your entry or ideal entry would have been at 134.05. That would have been exactly 20 pips. So with a 30 pip stop you would have been fine as far as what the low was. And how did that trade pay out? Well, if you would have entered then and stayed patiently in the trade, currently you'd be up 349, 350 pips. It never came back. Once it respected and tested this level, it obviously left the building. Now this morning we had another interesting situation in that the 50 back was respected, it got tested, broke through, came back and tested once here. That could have been an entry. Now if you look at this candle, our low on this candle, you have to trust me, it's not going to show up in the window there. The low was 136.12. Our entry was at 32. So again, that was a 20 pip fallback past our entry level. If you would have had a 30 pip stop, you would have been in there at 136.32, which that entry would have yielded you a high of 136.99. Almost the 137 level. So you would have had about a 70 pip entry there. Now the entry that's very ideal to me is the one that just occurred this morning. Again, we're looking at the 1 hour chart. If you would have entered at 136.32 with a 30 pip stop, the low of this candle was only 25, so it only went, what, 7-8 pips past, and we have already attained a high on this pair of 137.07. So another opportunity here to pick up about 70 pips on these two plays. Now again, these are very simple entries. It's just based off of fib levels that are based on larger pairs. Once the level has been respected and tested, then you have even more confidence that it's going to play. And that's one of the things that I think should take note too. As we look at this Fibonacci level here, we see that right here that level was respected. It shows that if it got near that 5.0 level, it was going to respond directly to it. It responded to that, so now when we do have a breakthrough of that level, when it comes back to kiss the level, now you have an entry to go long from that point. Hope this is something that benefits you. Feel free to email me. My email address is scott@udoo, that's EUODOO trading.com. Have a great day.